We spend a lot of time worrying about the right stocks to buy, focused on the big wins, but it's also important to be a successful investor and avoid the big losses. So this week I want to talk about two ways that you need to think about avoiding the losers. I'll also do my normal market analysis and we'll look at the trade of the week at the end of the video, a day trade that made considerable gains in a very short amount of time. All right, so let's talk about avoiding the big losses. There's two things I want to think about here. One is not getting into the wrong stocks in the first place. And the way that we can do that, if you are a position trader, and by position trader I mean holding stocks for weeks or even months, is use the Stockscores.com score, the sentiment score. This is my own little concoction. It's been up at Stockscores.com for 20 years. And it's a great way to avoid losers. So you go into the Stockscores.com website, punch in the symbol, it's all free. And the thing you want to do is, if the stock you're thinking about buying has a sentiment stock score that is less than 50, it's probably best just not to consider it, because really what that score means is it's sort of a measure of momentum. And if the momentum is negative, then that score is going to be below 50. So I'll just jump into the Stockscores website here. While you're there, make sure you register for the free membership and weekly newsletter. It's right here. But for example, if I pull up the S&P 500, SPY, you can see that its sentiment stock score is 62 right now, and it's been high for the last 8 months, and the trend has generally been up, okay? On the other hand, if we were to pull up, I don't know, ExxonMobil, which has been weak for a while, there you can see its sentiment stock score went below 50 in December and really was kind of hovering around that level for some time. Now I want to stress, we don't sell stocks because their scores fall. We have a more aggressive method for selling stocks, and that's what I'm going to show you next. So let's look at a couple charts here. This is Synovus, and what you can see is that the sentiment stock score was above 60 here. The stock was doing nicely, and then it broke the upward trend line there and then broke down through what I call an inflection point low right here. So what is an inflection point? Well, that's where price goes up, pulls back and breaks, and that is an inflection point. Anytime you break a pullback, you build an inflection point. And we have inflection point tops as well. There's an inflection point high there. There's another one there. So when a stock is in an upward trend, it's building these rising inflection points. And we can think of those as support. And when that is broken, when it moves down through that inflection point, particularly if the previous inflection point top is below the one before it, so this is lower than this one, what that means is momentum is turning. You know, there's all kinds of technical indicators you can apply to a chart, but I prefer just looking at the pattern, thinking about rising bottoms, falling tops, what's the trend. All you have to do is draw some lines on a chart to see that. So we had an upward trend line, it was broken, the inflection point low was penetrated there from a falling top, and that started the downward move. And so that's really what we're thinking about here. We want to avoid long-term trades on stocks with a sentiment stock score that is below 50, so don't even consider those. But if you're in a stock, you want to sell them when they break down through the last inflection point low, particularly if there's a falling top. And so again, we had a breakdown through this inflection point low from a falling top, and that telegraphed the move. And you can see that maybe a month later, the sentiment score went below 50 there, and it's been really below 50 for the last 5 or 6 months as this stock has been a really weak performer. Let's look at Tesla now, and you can see that Tesla had done very well in here and its scores were in pretty good shape. So that was a stock to consider at any point in here. And if you want to think about buy signals, you had a breakout through resistance there, you had a breakout through resistance there, you had a break of a pullback there. Those would all be buy signals. But more recently, the upward trend line was broken. We built a falling top. We penetrated this inflection point low, and that was a signal that Tesla was maybe a best to be out of, to exit that trade at that point. All right, so hopefully you've enjoyed that. We're going to now get into my normal market analysis, and let's take a look at the S&P 500, figure out where the market itself is going. We want to avoid crashes. We want to stay in the market when it's strong. Here is the short-term chart of the S&P, and you can see it's been sort of choppy and sideways the last few weeks, but the long-term trend is still up. So bullish long-term, neutral in the short term. If we go to the QQQ, very similar situation for the last 6 weeks. It's been sideways. You can see it there in the short-term chart, but the 3-year weekly chart still in a bull trend. And if we think about what I just mentioned here, the rising bottoms, the inflection points, they just keep rising from left to right, and we're never breaking down through one. When that happens, that's when we want to think about selling the market. When this upward trend line on the 3-year weekly chart gets broken, that's when we want to get out. But until then, stick with the trend. All right, how about the small cap stocks? They tend to, or they have tended to underperform the large cap because of rising or high interest rates. And if we look at the 1-month chart there, you see it's not bad, like it's building some rising bottoms, but we still haven't started to trend. We need to break through this resistance, trend higher. I think this is something to watch for. I think there's a pretty good chance we're going to get that break through resistance as the market starts to think about lower interest rates, and I'll show why in just a moment. If we look at the 3-year chart, however, it's choppy. It shows a little bit of uncertainty, so I want to see that breakout through this level to then make a stab toward the all-time highs again. All right, let's look at the Canadian market. T.XIU is the symbol. The trend is up, 3-year chart, rising bottoms. 1-month chart, a little bit of a concern because we broke this trend line, so we've broken down through this inflection point. Now we're building a falling top, and so in the short term, if it starts to move down through this level here, that would be a break through this inflection point from a falling top. That would telegraph more weakness ahead. It hasn't happened yet, but something to keep an eye out for. How about gold? Gold has been strong and really had a good start to the year after taking a little pause at the end of last year. Who's in control? The buyers are in control. How do we know that? Because the bottoms are rising, the trend is up. And so therefore, gold is a good market to be in. I think it's a bit of a chase to buy it here because it's gone up so much. Here was the breakout through resistance from optimism, from low volatility. That was the last buy signal. And then anytime there's a pullback, you can consider the break of the pullback. All right, let's take a look at oil. Oil's had some trouble the last couple of weeks. You can see, if we look at that 1-month chart, it is pretty negative. We're in a situation where there's falling tops. But again, let's apply what we've talked about. The bottoms were rising here. We had an inflection point low there. In the short term, it was broken as it started to build falling tops, and that telegraphed the move to the downside. Let's take a look at the US dollar, UUP, and we're going to go 1 month there. You can see it's choppy sideways, showing uncertainty, and that's because of the potential maybe for the Fed to start to lower rates again. They've paused, but the market's starting to wonder if we're going to get another rate decrease in the US. On Bitcoin, sideways for the last 2 months. If you look at that 1-month chart, you just see it's sort of choppy and sideways, but the 3-year weekly trend is still up. The bottoms are still rising, the buyers are in control. Now the last chart, which I think is probably the most important one, is TLT. This is the bond market chart, and it's had a little bit of strength the last few weeks, which is why some of those small cap stocks have started to look better because, of course, they are much more interest rate sensitive. Now, we still have not broken the cycle of falling tops. We need to get through this level, break the downward trend line, having started to build some rising bottoms. So I think there is a good potential. We'll see that. It hasn't happened yet, but that's one thing that I think you want to watch for next week. All right, so my ratings then, neutral on all the stock markets in the short term, but long-term bullish on everything except for small caps. I'm still neutral on the small caps, but that could get upgraded very soon if we get that break and if the bond market starts to rally. Gold bullish on both time frames, oil short-term bearish, long-term neutral, US dollar short-term neutral, long-term bullish, Bitcoin the same, and bonds short-term bullish, but still long-term bearish. We are in that downward trend. All right, well, let's get into the trade of the week. This is an example of a stock that we traded in our active live service at Stockscores.com. You can learn more about that at Stockscores.com. And it is a stock that I know nothing about except that it was moving up. I look for abnormal activity. You can see this is the 1-month chart. On Wednesday, it was boring, nothing happening. Thursday morning, it came alive. You can see the volume coming in. I've talked about this in many videos, and that's why you should be subscribed to the channel, because I do this for free. Check out these videos each week. I explain why that was a buy signal. You can go back and look at some of the old videos on the Stockscores YouTube channel. But anyway, we're breaking there abnormally, and then we made a little pullback and broke the pullback. So that was, to me, the best entry point. I love this pattern of boring sideways trading, comes alive, pulls back, breaks the pullback. That's a great place to be a buyer. And the stock moved from 370 to 489 in just a couple of hours. Had a little pullback midday, which often happens, and then finished the day strong. And that was this week's Trade of the Week. Hope you've enjoyed this week's video. If so, do me a favor, click the like button, subscribe to the channel. Make sure you're subscribed at stockscores.com too to the free membership. And as always, trade well.